The market's moving up towards mid-August highs as gold stocks finally join the inflation party, and we're looking at the latest additions to the portfolio while also looking to lock in profits now. Gary Glover from Novus Capital, how are you this morning?
Yeah, I'm good, Chris. Yeah, it's it is a bit buoyant actually. The market sort of yeah, a lot of people think this is a bear market rally. It might well be, but it's showing a bit of strength, a bit more strength than most people expected for sure.
Oh, you're definitely right. The market has been buoyant and pushed on up. Before we have a look at the charts, let's just quickly have a look at that portfolio because it's really strange for you to be sort of more than 50% invested, but you're 92% invested at the moment. So how's that portfolio tracking?
Yeah, so it's not too bad there. I think a couple of positions still holding us back here. Like I think the AIZ's still sort of stuck in a sideways rut there. Um, Definitely been a bit more volatility in some of those growth stocks. They've been sort of up big and down big, so they're really flashing back and forth. But yeah, the portfolio is still sort of going pretty well. So, yeah, give it a bit of room here. So I'll start to probably look to sort of try and trim a little bit into the strength there. So I still think that sort of mid-August is probably the most likely scenario, or it's possible chance of maybe first week of August, but I just don't see too much weakness here yet. Yeah, so yeah, this rally's been yeah, like the last two rallies are kind of obvious to me. They were really, really timid, really weak, low participation. This has just had a lot more participation. The volume's a lot stronger there. Even last night sort of was a bit of a what you might call a little down night or a little inside night, and that was pretty much low volume again. So yeah, just seeing sort of pretty good volume coming in on the long side here, and not too much on the downside. So yeah, just might hang on a bit longer here, push on a bit higher. So yeah, just looking at some levels to watch. Looking at overhead trend lines. Looking at we've both broke above the last swing high there, so maybe we'll go and retest that last swing low here. So, but yeah, the thing here with these bear market rallies, they do have a history of surprising here. So you're sort of got to give yourself a chance to make some money as well, So yeah.
So this speed that we're seeing on the Nasdaq chart that you're saying rallying up to sort of the swing high and possibly the swing low, is that sort of typical, this kind of speed of a bear market?
Yeah, it can get a sort of reasonable move there. I just look really. I try and look at actually what sort of can't see on that chart there, but looking at participation. So just sort of seeing what sort of volume, sort of commitments coming in. So yeah, if we look sort of, I look at a few other sources there to sort of see what volumes are sort of going through the different indices there. So robust, the volume's reasonably robust so far. So yeah, which is a really unlike the last two rallies in particular were very, very light. So there was just no participation in those. And as it got further up, the participation sort of faded. So you could kind of really had a strong feeling that there wasn't much in it. So whereas actually this has sort of gone above the swing high as well, which is positive. A bit more volume in there, which is positive. So okay, so maybe this go a bit further here. So mid-August is sort of still my preferred timing here. So it's only another week or two away here, but yeah, just you've seen in the past here, sometimes these bear market rallies they can sort of shoot up quite a bit higher than everyone thinks. So yeah, I'll be watching a couple of those levels, but at this stage still looks like it can go a little bit higher here. So, but I'll just start to trim a little bit into the strength and hopefully trim a little bit more if it goes a little higher. So, but yeah, it's just, again, you gotta give yourself room to make money. That's the yeah. So I will sort of try and take a bit off here into the strength.
Well, you've got a target. You're talking about levels. You've got 4,200 on this week's report talking about the S&P 500.
Yeah.
So why is that 4,200 significant?
Yeah, it's a bigger level there for the S&P. So there's definitely that obviously the last swing low and the previous swing high as well. So both had touches there. So we definitely got a couple of touches around that mark. So it is a level to watch out for. But yeah, don't be surprised to see an overshoot here as well. So I'd say sometimes these rallies, the only thing is I think a lot of people are looking for that point as well. So that's the only negative is I know a lot of traders are looking at it pretty closely. So but yeah, we'll see. Like probably the best thing we could do is maybe have a little bit of a consolidation for a couple of days, maybe, and then push on a little bit higher, a little bit of a consolidation, push on. So maybe a bit of a grind up into that maybe sort of higher levels there. But yeah, so our market's got a history of sort of probably being a little stronger than some of these other US markets when it's running here. So yeah, say 2000, 2002, that when the US market was making sort of lower highs, we were often, breaking deeper in the range, and on occasions actually we went to marginal new highs, which was amazing at the time. So yeah, so I've just got a couple levels here that we're sort of to keep an eye on there, but yeah, still I prefer that second one, the second high there around 7075, but I don't, this the Aussie market has shown relative strength in these sort of periods in the past here, and so yeah, can't, just got to be careful not to get too locked into a target here. This has definitely got the ability to sort of overshoot here. So yeah, I'll just try and stay with my longs. I'll trim probably the riskier ones if they have a bit of a move. If anything has a really bit of a pop, I'll probably lighten it off. But yeah, over the next couple of weeks, I'll definitely be trying to sell, take some profits, but at the same token, just trying to give myself room to make that extra bit of money as well. So yeah, if the charts look pretty good, I've quite a few of them do. Just got to let them sort of breathe and let them go.
Giving yourself the room to move, looking for the upside, you're obviously then drilling down to the shares that you'd be trading. So if we have a look at those trading shares,
because if you can get your sort of entry there quite good, and then it runs, and then you can get your sort of stop to break even, and then give yourself the target there. Even if maybe you only get, say, hit on 1 out of 3 of your targets, then if they're, say, 3 times your stop, or if you got them all to break even, then so it's about risk management here as well. So just sort of trying to edge things up, manage your stops, get hit on a few bigger moves, so lock a little bit of profit in. So yeah, that's all we can do there. Yeah,
that's a good strategy to have, especially in the bear market that you're describing. You've picked IAG as one of these trading shares. You're talking about low risk because we're down, trawling down those lows.
Yeah.
Historically, the insurers have been good in the high interest rate environments, but global warming has kind of been a downside for them. What's the chart doing for IAG to get your list?
Yeah, so I actually undernoted about putting this stock in here, actually, just because and the main reason, because the relative strength has been pretty weak here, while the rest of the market's been running up here. It sort of showed some weakness there, but you're right, it should be sort of performing better in this sort of circumstances. Just obviously there's all these storms and rain damage here we've had. It's just been a real negative for the insurers there, but with bond yields where they are, should be positive there. So I think the outlook for the next 1 or 2 years is probably a lot better for IAG. So but yeah, technically we can just see that 420 there has just showed that's really been big sort of support zone for the stock there. We did flash through there that once and then reverse there, so it's like a bit of a false break as well. So oftentimes you can get sort of fast moves there. So I haven't sort of seen it here yet, but we have seen it hold above that 420, which is the most important thing. So yeah, I do quite like it here, actually. I think the conditions are good for it, and oftentimes usually after these sort of insurance events, when they get called upon, that's when the share prices are weak. Yeah, it's usually the time to sort of get them. But yeah, so it's not the strongest stock on the board, but yeah, I think it's it does sort of meet that sort of value sort of stock here. Sort of the PE is not too stretched here. There's a bit of yield there. Yeah, and yeah, I think it looks okay here as well.
Okay. Well, if we move from one that's been underloved to one that has been loved previously quite well, car sales.
Yeah.
A growth stock, it performed exceptionally well over the last couple of years. But is it a bit risky to move into one of these growth stocks that hasn't been hit hard by that 50-80 rule you've spoken about a few times?
Yeah, potentially here, but I still, the relative strength here, the stock has sort of shown, we've sort of come back 50% of the weekly range, so hasn't had a big correction like some of the other stocks here, but yeah, we've still had a 50% correction in the range. That's still pretty decent. Not a 50% correction in price, but yeah, but so if you look at all the carnage there, think of the whole period there, it's stood up pretty well here. So a great business there, and yeah, so we've just broken out a bit of a consolidation here, so which is pretty bullish for me. So yeah, main thing there to maybe just watch for is maybe a possible sort of head and shoulders there, maybe up to 22. See how it goes up there, but I think the fact that it's actually showed relative strength is sort of, that's often when these stocks sort of perform. So yeah, I'm sort of long a little bit of car sales here, so I quite like it here. But again, I'll be edging my stop higher, hopefully as it climbs higher. But yeah, it looks pretty positive.
So just to harp in on that relative strength, this is a growth stock, and we've seen many growth stocks. You've listed a few that have really trawled out. They're trawling the bottom right now and maybe turning the corner.
Yeah.
But the relative strength you're talking about is that while the rest of the market in this space has really fallen down dramatically, car sales has actually held up relatively well. Is that the relative strength that you're referring to?
Yeah, that's right. So we're talking relative strength versus the market. So, but once, I guess one of those sort of age rules there, as you and I know, Chris, is that, if you do sort of go through, they say basically, if you're going through a bit of a bear market, you really want to be looking to buy the stocks that have held up the best in bear markets. So, the common sort of, retail sort of novice view is just to sort of try and buy the stocks that have beaten up the most. Do you think they'll bounce back here? And, things like obviously buy now, pay later is obviously the riskiest sector. You might sort of see if everyone thinks, oh, they'll all bounce back, but there's a reason why they've been beaten up there, because most of them don't make any money and it's been pretty risky and got overinflated. But the reality is, history will tell you that the best performing stocks that come out of the next sort of bull market, they're generally the ones that hold up the best in the bear market. So they're showing relative strength. So as the market's sort of going down, 30, 40%, these stocks might only fall, 20, 30%. So maybe half of the losses in, compared to the market. And as the market's making new lows, these stocks will be making higher lows as well. So they'll be showing strength versus the overall market as well. So you don't need to take my word for it. Go and read Bill and Neil's books. I think Trade Align does a series on this. There's lots of sort of proof out there. I think Minervini talks about it as well. So all the key sort of the best traders who look at trading these sort of growth sort of stocks, it's very sort of widely known and widely written about, and there's hundreds of examples there of sort of this case there. So it's not sort of something for me to be having to convince you of. I think it's already been proven. So yeah,
well documented, those leaders and the relative strength.
Yeah.
So, well, you've definitely consistently bringing them up in your reports. But if we move to Domino's now, so this one definitely has been hit hard, coming from 170s, getting down into sort of that 60 range. It's been beaten hard. It did well out of the COVID lockdown, home delivery, and then the aftermath. So what now, Gary?
Yes, that's probably one of the things there. Is obviously, like some of the markets come off pretty hard here, but this got the overshoot as well. So that's probably, you've because of COVID, there was basically everyone's all at home there. So there's, so there was definitely some stocks there that really overperformed in that market there, and that's obviously had a big correction as well. So then that turned down pretty hard here. So look, to me, this is sort of probably not showing relative strength there, but it did through the period. That sort of I think that's a result of sort of some of the oversoldness of the move as well. But come back to a big key technical level, we've had a nice bounce, good volume off that low, and then we've had like a little 3-week sort of consolidation there. So it's almost like not that I like head and shoulders and stuff like that, inverse head and shoulders and stuff like that, but it does look constructive there. So I just like the some good volume on the move up, bit of a consolidation there, and he just leaves it in a position to have another leg up here. So I think that looks pretty constructive there. Technically, this looks quite good. It sort of hugged that sort of descending wedge as well, which they often do. And so I just think that technically looks pretty positive there.
Nice. And one that you picked up a couple of weeks ago was talking about gold stocks. You were picking those up and saying they're being underloved. There have been cycles. I think at the time you were talking about coal being one of the worst investments and most hated investments or commodities. And now we all know what Cole's done recently. And at the time, you were saying that they all go in cycles, and at the moment, gold is very underloved. What's happening now with gold?
Yeah, so I just sort of, we showed a picture of we showed a chart of the spot gold there, which had bounced off a bit of a, really key level there. So that's interesting from the, just from the gold point of view, but all the stocks tend to often sort of lead as well. So they're just sort of bouncing off a bit of a key levels there. So just seeing some pretty good volume, seeing some pretty good rallies off a lot of the stocks there. So Newcrest probably been one of the less impressive so far, but has come back to, big key level, reasonable sort of timing here. And yeah, I think it can sort of get sort of going here, just like what I've been sort of seeing on the dailies as well. So I think this can have a nice bounce here as well. But yeah, some of the other stocks, Evolution, Northern Star, a couple that I've sort of been looking at trading as well. They've all had nice, pretty moves here. So so I mean, Northern Star's had a nice little breakout of that little sort of wedge there on the daily, and the most important thing now is that the volume's been pretty big and quite a few. I mean, you can just go through quite a few stocks there. I think on your Friday report there last week, Chris, I think we highlighted, I think it was 8 gold stocks were in the top 30 movers for the week there. So just showing it, there's definitely a bit of activity in the gold here. So look, we might get another scenario there where we get a move and it might be a fake out, doesn't, maybe it fails here again. But also we know historically that high inflationary periods there, that gold has done pretty well through those periods. So it hasn't done so yet, but maybe that comes in. Maybe this commodities are all going through cycles here. And we've just definitely seen some of the commodities have different cycles here. We've seen lithium have had 2 big boom and bust in that period there. We've seen oil have a bit of a boom and bust as well, another boom as well. So the commodities a bit more cyclical. They do go through these cycles here. So some reasonable signs here. The interesting thing with golds here is that, and we've seen it with all stocks as well, if you do get a decent move here, they really can just keep going. That's the thing here. So I sort of trying to sort of give these a little bit more room than maybe some of the other trades that I do, just because I know these potentially could move bigger. So I think I'm just thinking here that sort of, if I get my position set, I can add to my position as it climbs, and then try and get my stop at break even. Like normally I would actually do a little bit of partial trading, like I might trim some into strength and then try and pick some up on a consolidation there. But this thing could just keep going here. So it sort of got me in 2 minds actually how to play it, just because I know these sort of commodities, once they get into a groove, they really, they really can just get going there. As you say, that all those 2 sections I've highlighted there, they barely, there might be maybe one sort of week there where you have a swing low, like basically a swing low gets broken, but oftentimes they just keep going there. So yeah, if we give ourselves a little bit of room here, we could have a big winner here. But yeah, I'll just be it'll just be interesting to see how to trade these ones here, just because it's I think so far they're looking pretty positive.
Well, if we move into another one that's been cyclical in nature with the markets, we've had financial services companies, sort of market proxies, those who are related to markets, and fund managers. Some of those companies have reported well with some surprises of inflows and the like. How's IFL? What's that at? Why is that catching your eye?
Yeah, so just sort of one that I saw sort of technically there. There's some couple of reasons there. There's actually some reasonable volume sort of down the low there over the last sort of month. And then this has been a bit of a contracted sort of, quite a bit of time in this sort of decline here, and it's just sitting above the previous sort of swing high as well. So so it's just pretty interesting here. Is in that sort of wealth management, sort of fund administration sort of sector there. So that's had a bit of a pop here recently. So yeah, maybe these are going to follow here, but yeah, just technically look pretty interesting. It's not a stock that I've actually traded before actually, but yeah, technically it looked kind of positive there. I'm kind of pretty fully invested there, so I got no room for this one, but I just thought this chart looks pretty interesting.
Nice. And to round this out, you found a chart that's very different to all the other ones. This one's actually hard top right, which we have not seen for quite some time now.
Yeah.
And a recent IPO. So What is it? How'd you find it? And what on earth is this chart doing?
Yeah, so I thought, obviously I think we're sort of late stage in this bear market. So, whether we get another leg down or not, I'm not 100% sure. I think we'll get another leg down in October. That might, for some markets, that might be a higher low. For other markets, it might be a new low. I'm not sure how it's going to map out, but we should be looking for, we talk about, looking for new leaders and stuff there. So over the weekend, I just went through all the new listings. So basically, I looked at all the stocks that have been floated, IPO'd in the last 12 months, and yeah, this was by far the strongest stock I saw. So I think John Ling Group was the other one that I saw previously. I think it's now longer than 12 months. JLG, which anyone who saw that after this decline recently had a massive bounce. But out of the last 12 months here, the stock here just looked, it was one of the most impressive charts there, considering what the market's done, how robust that has been. So just that told me to put that stock on my radar. And if we get a little pullback in October, there's probably one to be having a look at there, just because it showed some definite, real relative strength there since it's floated. And so there's a few other stocks on the list as well. Probably I'll try and look at a few more of those over the next sort of couple of months. But yeah, there should be some new companies in there that are worth a look here, and some new sort of winners there potentially as well. But yeah, this one just sort of stood out. Just really, not many sort of stocks in the last 12 months that have been floated that look as positive as this. I didn't see any that looked better than this. So that's why I highlighted it here.
That is definitely.
I wouldn't be buying it here, but I would. I'll be watching this stock pretty closely around October this year to see what it's doing. If it,
So if the market does bottom, sort of those O'Neill days where they indicate the market may have turned.
Yep.
And a lot of those relative strength companies that you've already listed are performing well. Would the expectation be that this one may become a new market leader that just takes off and skyrockets?
Yeah, so I'd probably, the two highs there, if it came back down into 175 and that period then sat on top of that high, then that it had a bit of a grind there, pretty low volume there, all tightened up here. Then and if the company had some reasonable updates since then as well, then definitely one to keep an eye on there. Obviously, that's been pretty strong so far.
Nice. Well, so that's a good short list to have for now and the next couple of weeks or months. And we'll come back again on Friday, as you mentioned, those reports for the momentum leaders, Launchpad, and your weekly Tuesday reports. And if anyone wants, there's a link to Gary's playlist on the right-hand side, as well as mentioned false breaks, a bit like springs, that's on the right too. And we'll wrap there. So thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.